Welcome back. A lot of people come to the VIX and trading VIX products for different reasons, but most people come to, well, anything to do with trading, of course, because they're trying to make money. That's obvious. But many people come to the VIX in a very specific way. And I'm just going to put this chart up to kind of illustrate that here. And this is a chart of VXX, and a lot of people are initially convinced to trade the VIX because they see some chart like this. They see VXX, or they see a chart of UVXY, and you don't have to be a trader or a some sort of technical analysis guy or gal to realize that these charts are going down. Right? And so if you've got something that's always going down, it seems like a relatively easy trade. You figure out how to capitalize on the direction you know something's going to go. Usually in the stock market, you've got something, you don't know where it's going to go next. With the VIX, you've got something, and VXX is going lower over time. And at least you're pretty convinced of it when you see the chart of it. From year to year, you see it going down, down, down. And that's what initially gets people usually into the VIX. They say, oh, wow, these VIX ETPs, they just decay in value all the time. How can I get involved? Now, all of us who are watching stock market videos are here to make money. And everybody who's new to the stock market wants to come in and find an easy way to make money. It's almost, I almost wish there was a product out there. What's up, Mateo? How you doing? I almost wish there was a product out there where you could just type in how much risk you want to take, and it would take that risk for you. I compare it to people going to the casino, and they're like, let's put $100 on the roulette wheel, and in their mind, it's pretty much a 50-50 chance. Either I'm going to make $100 or I'm going to lose $100. Let's give that a roll. Well, people come to the stock market with the same thing, and a lot of times people want something that they can make money in right away. And the VIX and trading the VIX is deceptive in a way because it seems so simple at first. Just the concept of, look, this thing is going lower over time. So if I jump on board, if I just wait long enough, then it's going to go lower, definitely. And thus, I just need to find a way to start start making a bet that it's going to go down somehow. And then once it goes down, take the bet off. And that sounds very simple, but the actual what it takes to make that bet that this is going to go down, how you put that bet on, how you take it off, and how you manage that bet is a little bit more complicated and requires several skills that the beginner person trading may not have right away. And like I said, it's very deceptive because you see this chart and you say, well, this is a very simple concept. This thing's going down. So all I have to do is make a bet that it's going to go lower, and I'm going to make money. And, if it pops back up for a little bit of time, then I'll just wait it out. And that is true. The strategy of just getting short this somehow and waiting long enough is going to make you money. The problem is that people get tripped up in the middle of this, and to not get tripped up in the actual nuts and bolts of a strategy, the actual way that you put the trade on and take it off, that's everything here. And people get tripped up who are inexperienced in these nuts and bolts of the strategy. How do people get tripped up? Well, I would say the biggest mistake people make is they don't give themselves enough time. So they'll make some bet on an options trade that ends 2 weeks from now, and 2/3 of the time, these products will be lower 2 weeks from now. But that third of the time, the product's higher, and you're basically just left with a big loss on your sheets. Now, yes, you could roll the bet out to another bet and make your money back eventually when that other bet comes in. But in the meantime, you're just out money, and it can be very frustrating. And so I've seen it so many times where somebody comes on, they make a short bet in one of these products, it doesn't work out because the product goes higher, and they give up and they move on. Okay, well, that didn't work out. Let's try shorting Tesla or Apple or buying something in the stock market. The other thing that's a big struggle for people when they're first starting out is just the simple concept of shorting something to make money. That's for whatever reason, that's a hard concept for people to get their head around. You think of yourself coming into the stock market and buying something, and then it goes up and you make money. It sounds almost, I don't know, I'm from the U.S., so I could say it sounds un-American to short something. You're betting against, in your mind, it seems like you're betting against the country or something. Add to that the difficulty, if let's say that you are a intermediate trader, that you've traded some stocks, and you have grasped fully the concept of shorting something. You've in fact shorted stocks before, and you understand that to short a stock, your company or your brokerage, your clearing firm needs to borrow that stock from somewhere, and then you sell the stock, and then you buy it back at a cheaper price. Maybe you completely grasp that concept. However, there's a big layer of complexity that gets added with all of these VIX products because so many people want to short these things that there's no stock available to short. So the ability of people to sell these things short is not there for the average beginning investor. Yes, if you've got $1 million to trade with, your brokers will find a way to get your shares to short of these products. However, for the average trader, they're very hard to just sell shares short. In addition, the brokerages do not make it easy for people to put this trade on. This is due to the fact that if there is a market crash or something goes bad, these products will go up a lot really quickly. So because of that, the brokerages put a lot of things in your path that make it so these things are hard to sell short when it comes to selling the actual underlyings. They're going to put extra margin requirements. They're going to put these scary warnings. Even the media is going to put scary warnings saying, "This, you are an idiot if you are shorting a volatility product." There's a lot that's misunderstood by the media. The media thinks they equate UVXY or VXX to the actual VIX. So if you've got the actual VIX that's in a mid-range, like let's say VIX, is 15, it's in a mid-range. The talking heads from the media who should know better will come on and say, why would you want to sell something when it's just at the mid-range? Not understanding that the whole game here is that these products are decaying constantly over time. VXX is decaying constantly over time. I have a chart of it behind me. UVXY, same thing, decaying constantly over time. This chart it's decayed so much that it looks flat. Let me back it up. Decaying constantly over time. TVIX decaying constantly over time. However, it was this big mental leap that a lot of the financial media couldn't make the leap between the fact that the VIX, which doesn't decay, the VIX doesn't decay. The VIX goes up and down. It's a number that goes up and down. The VIX doesn't decay over time. It oscillates. However, VIX ETPs decay all the time. And the financial news media hasn't really understood that to a large extent. Now, yes, there's been a lot of awareness that's come about in the last few years about this, but in general, people just can't grasp the concept that I could sell a VIX ETP when the VIX is down here at 10 or 11, and sure enough, even though this is a low area for the VIX, these products are still going to decay from that level because they're decaying constantly. So a VIX of a very low level, let's say 11, might have represented a VXX level of 40 last year or 2 years ago. Now that 11 represents a VXX level of, say, 10 only. So these products are decaying all the time, and it's misunderstood by the media and by a lot of other people. So the third big reason why it's hard to trade these things for a beginning person, I would say, is because when you go on chat rooms and whatnot, and you talk to other people, they're gonna misunderstand these products as well, and they're gonna push back against you. So the best times to short these things, the best times to initiate a trade in these products is when we're in a spike, when the products are going up. And anytime the products are in a spike, any chat room you look at, people are going to be advising you that this is the end of the world, this is the beginning of the recession, the bull market is over, and you would have to be crazy to put the trade on that you're considering. And every time that this trade is at the best point to initiate it, you're going to have massive pushback on any kind of social media that you check out. So all those things require that you have internal confidence, that you are confident in your understanding of the VIX and VIX products, that you have that you can stand up and make your own decision even when people are advising you against it. And it also requires patience, because we know these things are going to come back and they're going to go back down. However, sometimes you have to wait. There was a period about 1.5 years ago where you would have had to wait almost a year for the thing to come back. Now, most of the time you have to wait a week or two before you're profitable, even if it goes against you. But it could be up to a year, and in fact, it was up to a year very recently. But if you have studied this stuff, you understand that, yes, that situation can happen, and it does happen. And yes, this stuff will come back, and you are thoroughly convinced that the stuff will come back and go back down, then you can come into the trade and be confident when you put it on. Now, these skills that I'm describing, having patience, having the confidence to go against the trend, understanding the complexities of hard-to-borrow stock situations, understanding the complexities of using option trades, calls and put trades, and put spreads to manage your risk. The idea of theta. Theta is a concept which you should understand before you're trading the VIX, especially with options trading. Theta is how much per day this stuff is costing you. Now, as I said before, you need patience for this trade, and sometimes it could take almost a year for the trade to go your way. So you don't want to have a position that's costing you a bunch of money every day, because Murphy's Law will kick in. As soon as you have a position that costs you a certain amount of money every day, Murphy's Law is going to kick in, and it's not going to go down for a long period of time. So these are all things that you need to successfully trade the VIX. And yes, it's a very simple idea that is actually true, that these products go down. And all it takes is a quick look at the chart to see these things are going down all the time. However, executing that simple idea is much more complicated, and timing your point where you want to get in and out is also very complicated. And I would stipulate that nobody has come up with the ideal way to time your entry and exit into this. Now, there's several strategies that work out there, and there are several different indicators people have come up with, and different ways people have come up with to automate and to make it an actual system and an actual a setup that you have rules ahead of time to buy and sell and when to get in and out of this VIX stuff. But in the end, it comes down to putting a trade on that will last long enough for this stuff to decay faster than however much it's costing you to have that position on. So there you go. Just some ideas about whether the VIX is something that you want to trade. Are you somebody who can be patient? Are you somebody who can sell when everybody else is buying? That's a big part of it. And are you somebody who's not going to be swayed by social media? That's stuff that you have to ask yourself. I can't tell you the answer to that stuff. What I can tell you is that this trade, although it has those challenges, is somewhat simpler than a lot of other stock market ideas where you're basically just trying to pick which stock is the most popular, or you're trying to do some sort of analysis of companies. And I don't know about you, but analyzing whether a company is good or bad is not something that sounds all that easy to me. All right, thanks for watching, folks. We'll check you in the next one, and thank you for all your support. Give a thumbs up. Have a great rest of the weekend. We did have that spike last week, but we seem to be back on track here with contango up around 15%. This stuff is decaying. We're on track again for a record year in the VIX, so I hope you get to participate in it and make some money yourself in the VIX trade. Thanks for watching, and I'll see you soon.